Good morning, everybody. It's Friday, May 26th, 5:29 a.m. Central Time. Guys, I'm going to run the quotes this morning because we are higher across the grain complex. July corn futures up 3.5 at 594 and a quarter last. December corn up 8.25 at 524 and a quarter. July soybeans up 12 at 1336. November soybeans up 10 and three quarters at 1183. July Chicago wheat up 7.5 at 611 and three quarters. July Kansas City wheat up 15 cents at 833. July spring wheat up 12 and a quarter at 818 and a quarter. Mackenzie, Brian, we're going to start with weather this morning. What's going on?
Weather forecasts remain dry for a large area of the U.S. Corn Belt. Over the next 7 days, almost all of the region will see little to no rain. Weather models predict rain in the plains and western Corn Belt beginning Friday and Saturday next week. The GFS model through June 10th is drier this morning and leaves much of Iowa, Illinois, Indiana, Ohio, and Missouri without material rainfall.
Brian, are we in a weather market yet? I think we are.
We are. And I think right now it's not only the forecast that we're looking at ahead, but you look at the percent of normal precip since April 1st, and it's been rather dry for a lot of the Corn Belt. So we've talked about 2013 quite a bit. And one of the interesting things is that we rallied into Memorial Day weekend in 2013, and then we gapped higher in new crop corn coming out of it. And I think if you have a dry forecast still, as we get out of this 3-day holiday weekend, we could very well try to gap higher, and I think the funds will cover shorts as we go into month end.
We're to the point now where the market is trading these forecasts like intraday as the models change. At midday yesterday, this GFS map that's on my screen, it threw a whole bunch of rain in for Illinois and Iowa and Indiana, and that rain is not in the forecast anymore. So the last 2 days, it was both Wednesday and Thursday, you saw the GFS flip wetter at midday, and the markets kind of backed off. But this morning, both this GFS and the Euro look even drier than they did yesterday. So I think that's part of the reason that the market's up this morning. And as we've discussed here earlier this week, funds are short going home. Do they want to be short going home into this 3-day weekend, knowing that there's weather risk? That's a good question, but I mean, I read this as being a friendly forecast, and if you see a confirmation of this Monday night, I think that could be a big deal in regard to the markets. Guys, we won't be doing a podcast on Monday, but premium subscribers, we're going to start our pre-open weather market videos on Monday. What's up next?
So the November 2023 soybean contract posted fresh lows again yesterday. The contract bottomed near $11.63 per bushel, the lowest trade since December of 2021. Some traders believe that soybeans may have picked up acreage in North Dakota, given the late corn planting. Others point to a huge Brazilian crop, weak Chinese demand, and softening U.S. export business.
I think it's all of the above. Brian, I have a statistic for you. New crop soybean sales, in terms of total commitments, we are the third worst of the last 10 years in regard to new crop soybean sales. What's on the books? Only 2020 and 2019 were worse, and that was trade war time frame. So the demand for new crop U.S. beans is not there. We better hope that everything that's we've been told about the crush expansion is true, and then some, if the export sales pace is going to continue the way that it is. I'm assuming you look at this chart and you don't see anything real positive.
Yeah, the only thing I've got right now, we did make a new low for the move yesterday and rejected that slightly. If you were to go back prior to Q4 2021, there was a period between roughly June of 2021 into December of 2021 where we had a sideways trading range, and really it was like 1150 to 12 for that 6 months. And so we're inside of that trading range right now. So we should have good support in that 1150 area. I think right now, if you've got the 10-day moving average kind of lined up right at $12, if we can get through 12 and get back up through that, I think you'll start to see some technical buying develop there and maybe revisit some of the longer term downtrends. But we have to get through 12 in order to spur that buying.
Yeah, soybean market can move quickly. You get the right fundamental sort of activity. I mean, you get this dry forecast to confirm come Monday night. I mean, you could rally 40, 50, 60 cents in a week. I mean, that would not be unprecedented at all. Let's take a look at the drought here.
So the drought remains an issue. USDA released weekly drought monitor data yesterday. Drought levels improved slightly week over week, but severe drought conditions continue to plague the Central Plains. Drought concerns are also increasing throughout the Corn Corn Belt, as above normal temperatures and a lack of precipitation are forecast for the coming week. So the percent of U.S. areas experiencing drought are as follows: 26% of corn country, 20% soybeans, 47% winter wheat, 8% spring wheat, and 37% of cattle country.
Look at Illinois, Brian. There's some drought there that wasn't there last week. It's not severe drought. It's abnormally dry. But if those forecasts play out, this thing could build a little bit.
Yeah, and this is what we need this time of year for the market to have a reason to say, okay, we got the balance sheet from the USDA earlier this month. We saw the trend line yield. Now we've got weather conditions that may want us or cause us to want to price in something sub-trend and see how long this weather story lasts.
And I talked with Matt about this earlier this week. If this forecast, say you get dry for 2 weeks and then the rains decide to turn on, that could actually be ideal for a lot of these areas, for Iowa and for Illinois. But you just don't know right now if the rains are going to turn on. The market may be not convinced, but working with the possibility that this just turns into a dry pattern. And if it turns into a dry pattern and that persists into, say, the second half of June, that's problematic, and that's friendly to markets, certainly. So yeah, without any sort of weather issue, I think these markets would struggle big time, and this is something that has helped recently, I think.
Spring plantings in Ukraine are nearly complete. Ag Ministry data released yesterday indicated that plantings were 97% complete. The ministry estimates that total spring grain area will decline to 5.5 million hectares from 5.9 million in 2022. The estimate includes 3.7 million hectares of corn, which is the country's largest spring crop by a wide margin. Farmers will also plant spring wheat, barley, peas, and oats.
So corn is the big spring crop in Ukraine. Winter wheat is the wheat crop is mostly a winter crop in Ukraine. So they're going to plant 9.4 million acres of corn this year. When you look at production estimates, this is what USDA has for this year. They're projecting a 3.4 million metric ton corn crop, which would be down like almost 40% from pre-war levels. Now that we're like probably permanently lower, I just don't know if Ukraine matters as much as it did. And we know that we're not permanently, but for years probably lower than what we had been.
Right. I think we have to continue to keep up on the story, but I just don't think we're seeing any headlines day to day that really matter at this point. We'd have to see some kind of a renege of the grain corridor in order for this to really matter. And we will likely see another story when it's up for renegotiation again, where they put a little risk premium in right before it. But that's been the pattern. And then at the last minute, it gets agreed to again. And then that puts pressure on the market.
Yeah, I've been exhausted of talking about this story for months, but you just need one little event for it to matter again. So I think it still bears watching, but it just doesn't move the markets right now.
Weekly U.S. corn export sales were down significantly from the previous week. Net corn sales reductions of 75,200 metric tons for the current marketing year were down 78% from the previous week and down noticeably from the prior 4-week average. Accumulated corn sales for the current marketing year are down 36% compared to the same period last year. Net soybean sales of 115,000 metric tons for the current marketing year were up noticeably from the previous week, but down 26% from the prior 4-week average. Wheat net sales reductions of 45,100 metric tons for the current marketing year, which is a marketing year low, were up 7% from the previous week, but down significantly from the prior 4-week average.
Absolutely terrible. Net cancellations for corn, net cancellations for wheat, very small net positive sales in soybeans. Brian, even the new crop sales were terrible, and we got to start to pay more attention to this. 245,000 wheat, 52,000 corn, 1,000 next to zero in terms of soybean sales for new crop. This is a big problem.
It is. This was supposed to be the time of year where we really saw some strong export sales on old crop corn. And we had a couple fits and spurts of Chinese buying that then they started to turn into cancellations. It is nice that we're still selling beans. They're small totals, but I think with the amount of stocks that we have out there, it's hard to expect that we're going to continue to see good old crop sales, wheat sales poor. But the new crop book that we have on deck right now is no good. And I just wonder, when they'll come in and start buying again, because we do have competition from South America. We've got the record Brazilian crop for soybeans, and it looks like the safrinha crop is going to be able to provide quite a bit of product to the world market for some time as well.
As I mentioned earlier, the new crop soybean book is the one that's the biggest concern to me, because I mean, in regard to soybeans exports, that's typically half your demand base, and we're in like trade war type territory when it comes to the book of new crop soybean sales. Now, it's around this time of year that China and your other global buyers start to book new crop beans. We're just starting off really slow. It could accelerate really quickly, but we don't see any signs of that right now. And to go back to that new crop soybean market, I think that's largely responsible for the weakness there, at least part of it.
Economic growth slowed in the first quarter. The Commerce Department reported yesterday that GDP increased at an annualized rate of 1.3% during the first quarter, which was a revised increase from an earlier estimate of 1.1%. Rising interest rates and soaring inflation are still having a detrimental impact on the economy. Economists believe a mild recession is likely to hit within the next year. Jobless claims were also reported on Thursday, and they increased modestly by 4,000 last week. Data from the prior 2 weeks was revised sharply lower due to fraud. Claims are still relatively low, indicating the labor market is not easing as much as the Fed would like.
Fed hikes are back on the table. Here's your CME Fed tool. 41% chance now that you see a quarter point hike in the June meeting, whereas a week or two ago, it was like almost no chance of a hike at all. So, you think you know something about interest rates, and then it changes. And I guess this is because some of this economic data has been a little bit better than expected.
Yeah, and the stock market's been performing pretty well, especially the tech side of things. You look at the NASDAQ, and we made some new highs for the move yesterday off of NVIDIA, which was up 30%, with very big move there. And I've seen in previous years where they talk about inflation, and then you look at the interest rates going higher. And a lot of times that move that everybody's looking for lower in the stock market doesn't actually come until they start to ease. And then you see the stock market to come under some pressure.
Yeah. Let's get to the debt ceiling. Maybe some progress.
Possibly. A deal regarding the U.S. debt ceiling may be close. Reuters reported late yesterday that Biden and McCarthy are in the process of closing a deal that would raise the U.S. debt ceiling for 2 years while capping spending on most items. The White House may be forced to scale back its plan to boost funding for the IRS. Discretionary spending on the military and veterans would increase, while non-defense discretionary spending would be kept at current levels. The Wall Street Journal notes that the deal would extend the debt ceiling issue past the 2024 election.
So they're going to have to scale back on the planned IRS expansion, which was going to be, Brian, that was like the 80,000 IRS agents that were going to have machine guns.
Yeah,
right?
87,000 armed IRS agents. You know what? If we could just give the spending to veterans and military and cut it from the IRS, I think I could get behind both of those initiatives.
I'm with you there. Mackenzie, cattle market was higher yesterday.
Yeah, it was. It inched higher on Thursday. There weren't a lot of big moves. Feeder cattle futures closed an average of 25 cents higher. Live cattle futures were up 51 cents on average. Cash cattle prices so far this week have been up in all regions. The range has been pretty darn wide. Down in the south, they're selling cattle around 171. Up here in the north at 185. Choice box beef ended the day on Thursday at 299.94. That was up 164. Select ended the day at 284.54. That was up 75 cents.
Brian, how do your cattle charts look?
Still look pretty good. I mean, we're trending higher. The feeder cattle market still looks good. We're still holding up trends. So I've got nothing really bad to say about the cattle charts in either product.
Outside markets this morning, guys. U.S. dollars off just a little bit. Stock market's higher. The S&P's up 4. The Dow's up 14. Head of the cash open. Gold's up $8. Crude oil up 40 cents in the July WTI at 72.24 last trade. Guys, remember 3-day weekend. Have a peaceful Memorial Day. Brian, Mackenzie, thank you for joining me. We'll talk to you guys next week.
For those who gave all, Joe.
Yep.